There you go. Oh, let me do that cool thing. All right, and we're live. There you go. We are live. Let's go
Your
here. Comments. What's that?
your fascination with countdowns is
Hey, man, you got to use them while you got them. They didn't put those for not to be used.
it's true.
All right. Let me do the. Oh, hold on. You gotta. There you go. All right. I see some people in here. Eric, how are you? Patty, how are you? Welcome.
I'm gonna put this on my page. I'm using multiple screens here, so give me a second. All right.
Hey everyone. All right, I'm commenting here. I'm gonna see if it lets me comment to everybody. There you go. I put it in the chat. There you go. Oh, I commented for all of us. Two killers. Hey Eric. Hey, thanks, man.
Eric, I love that game.
Yeah. All right, man. So yeah, we're here today. I see some good people. George is on. How you doing, George? We wave at George. I just waved at him. Allison, how are you? All right, we got 13 people on. We got 13 people on today.
Awesome, man.
Today.
You're ready?
Yeah, sure, man. Are you ready?
I'm very much ready.
Let me get my chair here so I can sit down and look at you.
Well, I appreciate you wanting to look at me. As long as it's
Man, my camera is always going blurry. I don't know.
as long as it's with respect, man.
Does this camera make me look white?
No, man. It's not the camera. It's the genetics.
Oh, okay.
Yeah, you're fine, bro. You're fine.
I'll talk to my mom about that.
Why does this shirt make me look black?
Nope. It's your face.
Okay. Well, then we're good. We're good, man.
All right, welcome, guys. Let's dive right in. We're 2 minutes in, I think. If you like this, we also we do birthday parties, bar mitzvahs.
We do.
Corporate.
We do. We call this the Salt and Pepper Show, and
Yeah.
then when we invite our buddy George, we call it the Oreo Show because we put David in the middle, and then I'm on one side, and then George, who's equally
This is not going to be a good show.
as
All right.
pigmented. So, anyways.
All right, man. So we're here to talk some real estate. I see a lot of people on here. I actually see some people here who are real estate investors. Hey, B. Hey, how are you?
Awesome, man. Well, thank you guys for joining us. I'll let you know that today's video is going to be me mainly asking David some questions. David has a lot of knowledge on real estate just because of the nature of his business, and he owns actually quite a bit of commercial real estate, and he also owns residential real estate. So I thought it would be a good idea, and so let's go ahead and get this started, man. I'm gonna shoot you some questions, and I guess you answer them, and then we'll just kind of let it flow from there.
Yeah, and anybody here who's watching, guys, throw your questions in the chat, please. That would help Ro and me immensely, so we could get some of the most common questions out of the way. So if you guys have questions, put them in the chat.
Awesome, man. All right, so let's go ahead and get started, brother. So the first question that I have for you is, why is it that people invest in real estate? Because I mean, there's a lot of other assets that you can invest in, and so me personally, like, I'm invested in a lot of the products that we offer clients. I got my permanent life insurance policies, I got my stocks, I got my cryptocurrencies, I got my annuities, I have all that stuff. Why real estate? Why is real estate such an important asset for people to be a part of?
Well, I think one of the coolest things about real estate, let's just compare it to maybe the stock market, because most people will say, I want to get into real estate, I want to get into stock. They don't say, I want to buy artwork or jewelry, or, I mean, they may want to do those things, but that's not their investment strategy. That's just most common. And I think the most appealing part of real estate to most people, including myself, is the tangible asset, like the feeling of ownership, the I know that I actually have something that's worth value here. Because when you go into the stock market, although it is a tangible, somewhat asset, it's kind of imaginary. You can't grab a stock and hold it and hug it and and really show it some love. That's kind of funny to say, but you just don't have that same feeling of ownership as opposed to any other investment that I've seen. Other than obviously money, but money's not an investment. It's a tool for
Sure.
investing. So I would say really the one reason is because most people decide to get in real estate because they want to own something that they feel tangible, that they feel like they have ownership in and control. I think it's a control factor too. I think real estate, so most people feel like they can control the outcome as opposed to any other investment when you really don't know. I mean, we could talk about all of them, but honest truth is you just don't feel like you're in control most days.
Okay. Well, so you know what? Actually, out of the response that you gave me, it kind of triggered a lot of other questions. But I'm going to get through the questions that I have first, and then we can
write them down.
We can always circle back and add some additional questions. So, okay. So it's a tangible asset. So definitely something that you can see, that you can touch, and I can definitely see that being something that would give people more certainty than, like me, for example. I mean, I have quite a bit of money in cryptocurrencies. Well, that's not necessarily something that I can touch, but it does go up in value. So I definitely do see that as a good asset to own. But I definitely see it with the real estate. So then my next question is, as far as credit is concerned, in today's day and age, do you need to have good credit or amazing credit to be able to get into the real estate game?
Actually, that's a good question. And the answer is no, you don't. Now, does it help? Of course, right? Credit just gives you the ability to leverage what you currently have. So what I mean by currently have is maybe you already own something. When you have good credit, you can borrow against it. When you want to invest bigger amounts of money than you don't have in your bank account, use credit. But if you don't have credit, it doesn't mean you could stop you. You could be very creative in financing and in investing. And so when I think about people who tell me that credit is their challenge, it's really not credit. It's probably a lack of money or drive or commitment. There's other reasons, but it's not credit. Credit's just a tool.
So you're saying that somebody that has less than what we would consider good credit. So let's say if we put a number to it, maybe less than a 700 credit score, they'd still be able to buy a home, whether it's their first home or whether it's a rental property. They just need to have some capital. They need to have some liquid cash to be able to do so.
Cash is king. I mean, you don't have to have good credit. I mean, imagine, just for an example, you could have horrible credit right now. Let's say a 500 credit score. And you go and I don't encourage anybody to buy a lottery ticket or anything, or maybe even an inheritance, for an example. Somebody dies or passes and they leave you some money. You can go, if they leave you $200,000 in cash, or you win $200,000 in cash, you could buy a piece of real estate without good credit. So it really is just, you don't need credit. You just need to have money. I mean, that's kind of funny. And not even a lot, by the way, because we could even go down to how much money you possibly could use, but it helps just to have money. I mean, you still need money.
And you're saying money in the sense that not necessarily to buy the entire property cash, but more so to be able to put down a sizable down payment, I'm guessing?
Correct. Both. You could do both. But yeah, I mean, a bank, when they lend us money, they want to know, number one, that you can repay them. And number two, if you can't repay them, what do they get from you in exchange for not paying them, which is the real estate. So in most cases, the more you put down towards a property, the more leverage you have to borrow money. I mean, so worse credit requires more down, but there's all types of lenders out there. Like, people think about lenders and credit, they think Wells Fargo, Chase, Bank of America. There's so many more lenders than that in the world today. So it's not about credit. It's just about having enough cash to start the deal.
And these are legit lenders, right? It's not like the lenders that visit you in the middle of the night if you're like 2 months behind.
Okay. There's probably those type of lenders out there. I don't know those guys, but I would tell you this, that, the lender, just remember this in real estate, the lender doesn't want the property. Like, they don't want to come take it from you. Like, that's not their goal. I mean, the lender wants to get paid an interest rate on their money. They do not want to be in the real estate business. If they did, then you wouldn't have a place in that transaction. They would just buy it themselves, right? And so The lenders have every incentive to figure out how to lend you money.
Because they're making money off of the interest that they're charging you, not necessarily the property itself.
Correct. I mean, I actually thought about this recently because imagine right now I like to buy real estate, and I like to buy small properties, nothing big, right? Maybe something under 150,000. And I thought to myself, David, if you had, let's say, I don't know, 50 million bucks, would I be worried about doing $150,000 deals? Probably not, but I would lend money for somebody to do that deal because I don't want to do the work anymore, right? That's what lenders are saying. I don't want to do that work. I want to make money with my money. I don't want to go do the work anymore. And that's what the lenders do. They don't want to do the work. They want to make money with their money.
Sure. Okay. So then my next question for you is, let's say you don't own a property at all. You don't own a home that you live in. What should be your first step? Should you buy a property so that you can live in it? Or if you're renting, should you buy a duplex and you live on one half of it and you rent out the other half? Should you rent and buy a property that you flip? Or like what do you recommend as far as your first step if you don't own any type of property as of yet?
Well, the first thing is you need a place to live. So if you're renting, let's get you out of that because you're just paying somebody else's mortgage, right? I mean, there are some pros and cons to renting, but in my opinion, throwing away money is never an option. And that's what you're doing when you rent. So your first goal is to get into a home. And people want to say fourplex, duplex, triplex, whatever. Those are options. But in most cases, the down payment size there is going to be substantially greater than just buying an individual single family home. So what I would say is what you need to do, and I hate to say the term starter home, but it is kind of a cliche statement, right? You want to find something that's in your budget that doesn't extend your borrowing ability. Something if the lender says you can borrow 200,000, if you can qualify, there's other things we got to talk about, but you don't want to borrow 200. You want to borrow somewhere below that, so you have some margin to borrow in the future again. And you want to get into something that probably needs a little bit of work, and you're willing to do. And that could be your first. I'm not saying starter. I would say that's going to be your first investment property, and the one you live in. That's got to be your first investment. I mean, it would work because if you do this, what happens is you start fixing it up, make it look nice. I mean, if somebody would have bought a house 2 years ago today, or 2 or 3 years ago, and they put a little money in it over the last 2 years, right now that thing's probably 20 to 30% worth 20 to 30% more than when they bought it. And they could sell it right now and make 20 to 30% more than they actually put into the home. And start with just one home. Don't think so big. I mean, I'm not saying to not think big, but if you're trying to figure it out, find a starter home, something that you can buy comfortably and fix up yourself. And by fix up, I mean paint and stuff. I don't mean do electrical work unless you have to do that stuff, right?
So just like the minor TLC, just giving it like a cosmetic makeover type of deal.
Yeah, make it look pretty. I mean, people buy on appearances, right? I mean, if you go look at a car right now outside, you look at the body first. Even the engine could be nothing, and you would say, "Well, I love the car, I'd buy it." But under the hood, nobody sees it, right? Nobody knows what's under the hood, man. It could be a 6, could be an 8, could be a 4. But the outside is what people look at. That's what they buy. They buy the appearance.
Sure.
Make it look nice.
Okay, so then my next question is, what do people need to be aware of? And by people, I mean investors or somebody who's wanting to buy their first home. What do they need to be aware of as far as the housing market, the real estate market, before they get in? So like, for example, I'll let you know as far as what I know, because you're a lot more knowledgeable on real estate than I am. I know that right now it seems to be a seller's market. Property values are extremely high. And it seems that that's due to limited inventory. Like COVID really forced people to not sell their homes. And so people that are wanting to buy homes, they don't really have a lot of inventory to choose from. And whenever there's more demand than there is supply, then that makes prices go up. So if somebody's looking to buy for the first time right now, whether it's their own personal home or maybe an investment property, what do you recommend they educate themselves on before doing so?
Well, first off, I guess know your budget, right? That's the first thing you need to know. How much money can you afford to spend? And the way you do that is just go to a lender. That's the number one thing. How much you can afford to buy. Because I mean, if you've already made a commitment that you want to buy, you should already talk to a lender. Find out how much you qualify for, what kind of lending you can get, what kind of interest rates you can have. And if it doesn't sound appealing when you go, honestly, it may not be the right time to do it. But right now, knowing that it's a seller's market, I would tell you that you're gonna pay. You should know that. The way you'll know it, honestly, is just go look on Zillow or something, and you'll know that there's nothing there. I mean, you're gonna see 10 homes, 15 homes, 20 homes. That's not a lot of inventory. So that means the price has gone up, and so you don't have anything to buy that's reasonably priced. And so if I were telling people what they should be looking for is just know how much you can afford by going to a lender. Simple things, work with a realtor. If you don't have a realtor, I mean, we can refer you one, but that's what you should be using. And this is just for buying a home. Now, are we talking about investors? Did you want to talk about specifically investors?
Well, I have a couple of questions that will pertain specifically to investors, but really just anybody in general. I know that by helping clients with finances in the past, a lot of the times they tell me, well, I want to get into real estate, and so some of the recommendations that I make to them is what you just said. You have to determine what your budget is and actually talk to a lending institution to see what type of money you can get. But then I also tell them to understand the market in the area that they're wanting to purchase a home, because I think a lot of the times people think it's very, very easy to go and buy a house, like you said, add some TLC, a little bit of paint, some polishing, and then flip it for 20 or 30% more. And I think that can very well happen, but I think a lot of the times maybe people pay more for a house than it's actually worth. So that may eat a lot of their margin. I think there's mistakes that people make. I don't think it's just as easy as just buying a home, painting it, and flipping it. I'm sure in some situations it is, but I'm pretty sure that there's some other horror stories where people end up negative on the deal, or maybe they overpriced the home, so they have to hold on to it for a year or 2 years, and they're being charged interest on the loan that they took, and so it's not a good scenario. So what's your take on that?
Well, it's really true that there's not. I'm going to tell you, there's never a wrong time to buy real estate. Although there may be a seller's market right now, so that means prices are higher. There's never a wrong time to invest in real estate. I mean, you could say there is, but there are wrong real estate investments to do. Meaning there's the wrong property, but it's never the wrong time to think about this. Like, just because it's a seller's market doesn't mean we shouldn't think about it. It means that we just have to be more selective of our deals. And it isn't as easy as I'm making it seem, obviously. There's a lot of work that goes into figuring out if a real estate deal is good for you or not good for you. And right now, what I look at is just, honestly, if I were telling an investor right now, if they want to get into real estate, I would say you're probably not going to buy anything that's for sale on Zillow or Realtor.com or wherever you find it, because in most cases, those are already overpriced. You're looking, in my opinion, and this is something I learned from a guy a long time ago, which was really smart. He said, all you do is just drive down any street in any neighborhood, just go down your neighborhood. And he goes, every 7 years, the houses on your right and left are going to change hands. Average home life, if you will, of a person owning a home is 7 years right now. So they're going to sell, and you need to be that person when they sell. That's where you get the real deals. You don't get them off of MLS. You don't get them off of, and you got to let people know you want to buy too. So that means telling people. What I would say is you should always let people know that you're looking to invest in real estate. And so if they have a friend or a family member that's going to sell their property, that's what you should be talking to them about, right? Before they put it on the market, before they think about it. So, I mean, there's really not a formula here for me that I've seen so far. I would just tell you, you should be informed of the price of real estate. And the way you could do that, you don't have to talk to me or anybody. Just call a real estate agent and just say, is it a buyer or seller's market? Do you think I should invest right now or not? And a realtor, if they're good, which I mean, most are, they're going to tell you. It's probably not the right time to buy if you're investing. That's what they would probably tell you.
I'm with you. And, it's kind of ironic that you say that, man, because the first home that I owned, I sold it in 7 years. Like exactly.
And
7
you made
years.
some money. And you made some money. I remember.
I did actually, without knowing anything about real estate. Yeah, that was a 100% return on investment, because I sold it exactly for double the price that I paid for it. So that ended up being a good deal. But yeah, man, I mean, I can definitely see that. So if you're wanting to get into your first home, see what you qualify for, talk to a realtor, and see how much house you can buy. It doesn't have to be your forever home. It just has to be a starter home. and you can buy it with the intent to fix it up a little bit and then eventually sell it. But if you're looking to invest in real estate because maybe you already have your primary home, then at that point it would be wise to see if you can buy directly from the seller. So trying to find properties that people are willing to sell and try to get to those deals before they go on the market.
Correct. That's the way to do it now. Right now, in a seller's market, that's the best way to do it. When there's a buyer's market, they're all going to be out there.
Right.
They're all going to be fighting to sell to you. Right now, the seller it can be picky, and they can raise the price on anything. I mean, I've seen some crazy valuations right now. So, yeah. which is really good if you want to sell, and which is really good if you buy a really good deal right now. I mean, which is killer deal.
But I guess it's a double-edged sword, right? Because if you sell a property right now, sure, you're going to make a killing because it's worth more than what you bought it for. But then if you go and try to buy another property, then it's going to suck because that's also overpriced. So maybe like the wise choice would be to sell the property that you have right now, maybe pay rent somewhere for a year, wait for the market to stabilize, and then get back in.
Yeah, so you got to have somewhere to go. Right now, if you sold your house, you don't have anywhere to go. You got nowhere to go, man. I mean, I've seen about maybe 5 or 6 transactions in the last 2 or 3 weeks where the people who sold had a second home. So it made sense for them to liquidate their main residence, which was highly valued, so that they could go live, and 3 of them had a condo on the beach. So it just, poor people.
They get to go live on the beach for a year.
Yeah, poor people, right? Poor people.
I'm with you, man. I'm with you. Okay. So if you're wanting to get into the whole real estate investment game, do you think it's better to buy a property and rent it or to buy a property and flip it?
Well, here's what I would tell you. You got to find a price point that makes sense to you. So for me, for an example, I want to be under 150,000 if I'm going to buy. And if I'm buying under 150, I'm going to hold it. I'm just going to hold. If I go in over 150, I'm going to flip. So what I've learned so far is that over 150 to 200,000, there are very few players in the flip world because it costs a lot of money. You got to have a lot of capital to go into those deals. You got to have good credit, or not good credit, just good financing. It doesn't matter. It could be a friend who lends you the money. But there's a lot of work and a lot of money that goes into something over 200,000. So if you can find a deal at that price point, I believe that's a flipper, because I don't want to lock up 200,000 or a lot of credit line on something such a big deal. I like smaller 150s because those are manageable for me, just personally. So when I see under 150, I want to keep it. I want to hold it for as long as I can hold it. And I actually created a formula. This is something I didn't learn, but I figured it out. I want my properties to pay me. I want to rent a property, and in the first 10 years, pay it off with its own rent, with the own rent that's coming through it. So if I can figure out the purchase price and it makes sense, within 7 to 8 years, I've gotten all my money back. That's a great deal for me to hold. If I can't get it in 10 years, I don't want to keep it. I want to flip it, because I think 10 years is a good amount of time for me personally, but also for the roof and the maintenance
and the AC and the boiler and all that.
It gives me 10 years to kind of get through all that. And then after 10 years, either I sell it and double my money, or just continue to rent it forever, but it's free and clear. One or the other is going to happen.
Gotcha. Yeah, I think with me personally, and also in conversations that I've had with you before, I think I lean more towards the flipping than the renting, just because I see maybe not with 1 or 2 homes, but like if you get to a point where you have like 7 or 8 homes, then the property management on that is a job of its own. And I'm trying to figure out how to work less, not how to work more, right? So in those scenarios, I mean, you still think that renting it long term would work? I guess it really just depends on what it is that you're wanting to do.
You got to have a little plan, but here's what I thought about recently, because I was looking at 4plexes and 8plexes and stuff. Those kind of deals, they don't cash flow at a high level, because typically the rents usually just cover the mortgage. In most cases, if you're mortgaging the thing. If you're buying it cash, it's a different story, but the return is still the same. But if you buy an 8plex, for an example, or a 4plex, you only have to go one place to fix the stuff. You don't have to go four different places, four different houses. So what I had bid on a property, a fourplex this week, and I didn't win, and I was dumb because I realized afterwards what I should have done, which is I offered not enough. Like they were asking 240, I offered 260. I should have gone at 280. And the reason was what I didn't calculate a 10-year payoff. And if I would have done it at if I would have done 280, I would have paid it off in 10 years with the rents. And I should have done it. I should have just gone 280. I probably would have won the deal. Would have been 40 over asking, but I would have won the deal, and I would have only had to drive to one place to do maintenance, just one place. And instead of buying four houses and having to go, you're right, 4 plumbing problems, 4 water leaks, 4 that it does seem like it's going to get messy for me. So I guess what I would tell you, Raul, and anybody who's thinking about investing, find homes that you don't see a lot of work to be done, right? Like I don't want to buy a house that's $30,000 just falling apart because I'm gonna have to put so much money into it. Probably wouldn't be worth my time and my energy. But don't buy something that's, really perfect. If it's perfect, you're probably overpaying. Sure. So you want to find something with a slab foundation, something that has a nice roof, and probably just needs a lot of cosmetic and interior work, and that should be your deal, and you should be okay not with all that maintenance that you're thinking about.
That's what they call the wedge deals, right?
That's what you call a wedge deal.
Yeah, gotcha. So maybe like a good tactic would be like if ultimately you want to work your way up to like a fourplex or some type of a complex that will house multiple families, then you can always start smaller, and then whatever your return on investment is, then just reapply to the next deal, and then flip that, reapply to the next deal, and then work your way up to where maybe even eventually you could buy that fourplex cash, just because the profit that you've made off of each deal, you just put it back into the business, which is the real estate investment business. And I'm sorry, Correct. Real estate investment business.
Correct. What I found, man, is that many people who want to get into real estate, this is like the one rule I've seen, not rule, the one misconception is everybody's getting into real estate so they could get cash flow. And the problem there is that there's not much. I mean, you could get cash flow off real estate. I'm not going to say you can't. It's just not. I mean, you'd have to get the hell of a deal for it to be life changing. Sure. In most cases, you're making such a small piece of profit above what you actually had to pay for the deal that you shouldn't buy it for cash flow. You should be buying it for the asset, like so you could build wealth. You don't need to have the cash flow. The cash flow you should put in reserves to buy the next deal.
Sure.
So most people are like, well, that $200 that I'm going to make over could pay my next car payment. Well, that's not the kind of deal, because then when the pipe breaks, you don't have the $200 anymore,
Right. So use it more like an appreciating asset, like you would a stock. You don't buy a stock because it's going to go from $100 to $200, and then you can keep the excess $100. You buy it because it's going to go to $200, and eventually it's going to go to $300 or $500. You buy it as a long-term investment, not as a cash flow vehicle.
It depends on by the way, I've heard you say this many times, there's different stages of your life, and right now I'm in the accumulation phase of my life. I want to accumulate assets. I want to accumulate not cash, because cash is not what I'm in right now. I mean, that's why we work. The Sure. work is supposed to pay me to live, and my investments are supposed to grow so that when I don't want to work anymore, they pay me, right? And many people want to get both right now. I want my work to pay me, and I want my investments to pay me. It doesn't work like that. You have to have a plan for both sides. And I think that's the thing that's why most people can't get into real estate. It's because they're thinking about how much money they have to make right now on the deal.
Sure.
And if you go into it not wanting to make any money right now and really just planning for the future, you're not scared about investing in real estate. You don't get scared anymore. You just don't get scared.
That's true. Ask me about my Tesla shares. We'll talk about that in a different day. Okay, very good. So moving on. So why do you think that people fail at the real estate game? Why do you think that people get in and then maybe they get out and it's not something that was either as lucrative or wasn't as enjoyable of an experience? But I guess that ties into what you're saying, that sometimes people get in with like short sight in mind, like they want to make profits real quick, where it's more, well, I think any type of investing is it's going to have to be a long play. It doesn't matter what it is.
Yeah, I think people get messed up in real estate, not just because of the length of the time they want to get a return. I think people get into real estate thinking that it's their baby, if you will, and they start putting a lot of money into it. They start designing it and making it super beautiful. And by the time they know it, they put so much money into it to try to get their money out of it. It's going to be very difficult. And so that
Sure.
I see that happening with people's first property, like when they buy their first home. And they're like, oh, I love this home. Let's put a patio out in the back, and let's go add this, and let's redo all the hardwood floors, and let's add the brand new cabinets. And don't get me wrong, you can do all that if you have the additional resources to do that. But if this is the home that you're starting so that you can build your empire, you don't need to do all that. You need to make sure it looks good, resurface the floors, right? Redo the countertops, but would not marble, with something affordable if it needs it, right? And like, so I think what happens is people fall in love with their home so much that investment that they planned on using as an investment just becomes, a big liability because they can't, even though they may owe less than they get in return for the sale, it's just getting their money right back. It's like they lent their money out to themselves for just a small period of time.
It's a boat. It's a money pit.
There you go.
It turns into a money pit. It stops being an asset, and now it's just something that's costing you money that you're not going to be able to get back.
Correct. And then what I see all the time is a guy buys a house for $150,000 or a couple, and then they go in and then they put $15,000 on their Home Depot credit card. And then they go to Best Buy and put another $20,000 on appliances, and then they go another $15,000 on hard. And so they're at $200,000, but they thought they bought a $150,000 home, but it's really $200K. And so when they go to sell it 5 years later, they're like, oh, they offered us $200K. Well, you're not really making any money. You're just getting your money back.
Well, actually, you lost money because if you factor in inflation
and interest.
Yeah, over the course of 5 years and opportunity costs, what you could have used that money for, those extra 15,000, you could have put them somewhere else, and they could have turned into 100,000. So yeah, there's a lot of factors there for sure.
So yeah, I see that a lot, and you see that when you tour houses like that. If you were to go on MLS or Realtor.com and just go look at a house right now, you're gonna see all those over improvements. I mean, they're abundant, and it's not their fault, by the way. It's just people fall in love with their house. They just fall in love with their house, especially over the last 12 months.
Sure. Well, yeah, because you've been home. So it was like, let me add a theater room and a bowling alley and all this stuff that, yeah, you may not need. If not, well, I guess if you're going to live in that home forever, you're not really wanting to invest any of that money, sure. But if you were planning to sell that home at some point, then somebody else may not value it as much as you would.
Correct. And there are a lot of things that you could put in your home that don't really add value, but they mean a lot to the owner. And so
sure.
That's what it is.
I'm with you, man. Okay, so we're almost done through all the questions, but I think this is a very important one because I see this pretty often. Real estate investing through a third party. And I know that me personally, I've been approached about this before. And it's not because I don't want to use a third party. I'm just like, I mean, whenever I want to get into real estate, I'm pretty sure I can figure out how to do it on my own, right? But there are third parties out there that will do all the work. Like you put the money, they do all the work, and they give you a return on investment. What's your take on that? I mean, is that something that people should take advantage of? Should they be cautious as far as who they do business with, as far as that's concerned?
And are you talking about actually giving your money to somebody so they can do the investment for you?
Sure. And they promise you XYZ return, interest rate wise or whatever.
Well, that would be very similar to getting into the stock market, in my opinion.
Sure.
Not because the stock market's so volatile or it isn't volatile. I'll just say every time you put a money into a stock, you're letting them use that money however they want to use it, right? And you don't have a say-so unless you own a good chunk of the company. That is a different story. But in most cases, you're giving it to somebody. So here's what I would say. I would not do it. If you're a new investor, for sure, no, because you need to understand what they're doing, because giving your money to anybody without actually understanding what they're trying to do with it or they're going to do with it is kind of not a smart move to begin with. But the second to add to that is I wouldn't. I would tell you, you must be willing to lose all that money, because if you understand it and you believe in the person, but you just got to be willing to lose it. Just like the stock market, you got to be willing to lose it, and you got to be willing to not have control. And that doesn't sound like most initial investors. That's a very savvy, very seasoned investor. When you can say, "Here's 100,000." Just send me 10,000 a year for the rest of my life and we'll be cool, right? Or whatever they want. But not very many people can do that. So I wouldn't recommend that at the beginning. I would say that might be something that you would do as you understood the game. And me and you have talked about this. We'd love to start our own fund and have a bunch of investors, but I would not do that with beginners. I would do it, well, maybe they could be beginners, but I would be doing it with people who had enough money so that, they feel comfortable and I feel comfortable handling it. If I lose it all or we make a bunch, what I would say is they're going to be okay. They call those accredited investors.
Sure.
That's hard to find, by the way.
Well, and I think that those types of deals would be adequate for flipping, not so much for renting. So let's say, for example, let's say you, me, and a third person put together like $50K to go buy a property, and let's say we buy the property for $100,000, and we put $50,000 of renovation, and we're able to sell it for $210,000, and then we're able to split the excess margin, the excess $60,000, which is $20,000 a piece, among the three investors over the course of 3 months. You make $20,000 in 3 months. Mm-hmm. I think that's a good deal, right?
I think it's a great deal.
Where you can get the return on investment quickly. But if it's going to be something that's going to be prolonged over the course of like 5 or 6 years, where you're going to get 5% annually over the course of 5 years, I don't see it, because I personally know that there's financial products that can do that without having all of those variables as far as, well, how is this guy working out the deal? Is he really going to pay me this percentage of interest rate? Like there's too many uncertainties in that scenario. But if it's something that's going to be a quick flip, and especially if you're working with people that that are trustworthy people,
that's the key.
I think that you're right. I think that's the biggest key. And then if you work it in a way where, instead of keeping that profit, well, now we take the 206 or 210,000 and reinvest it in another property, rinse and repeat, and now that turns into 300,000, and so on and so forth. And eventually, it can turn into something that'll be pretty substantial.
I love the idea. There are some tax implications to that, but we could talk about another one, but here's what I would say is, as long as the people that are involved in the transaction are trustworthy, who have more than just what they put into the pot, because then it makes sense to do a short-term deal with them. I would do it with anybody who I felt confident that they weren't putting all their eggs in the basket.
Sure.
I think that's the key. So if you're wanting to do it, the way I think of everything is creating your own economy in your well. That's kind of the title of my book. And what I would say is, if you're going to invest in real estate and you're going to lose, at least let it be because you lost.
Sure.
Not somebody else lost your money. You know what I mean? Like, I wouldn't give you $100 and tell you to go play poker for me, right? I want to go lose the money, right?
Sure. Ask me about my Tesla stock. Anyways, cool, man. Well, that's very insightful. As far, and that way we can wrap this up, because I don't want to keep this too long, but what would be, like, what's a game plan? What would be step one? Like, I know that you and I are working on a couple of just really cool things that we're going to be able to roll out to people here in the future, as far as not just real estate, because I did a video earlier today on just some business practices.
That was really good, by the way. Good video.
Thank you, man. Appreciate it. And so I know that we have some stuff that we're going to be rolling out that's going to be accessible to everyone, but just in general, aside from memberships and things that you and I are working on to be able to make it available to the masses, what do you think people can do to get themselves to a place where they can buy some real estate? What would be the first step?
Man, that's a good thing. Well, first off, you probably should get around somebody who's doing it. I mean, you can't go to a barbecue on Saturday night and talk with a bunch of people about how you're going to invest in real estate if they've never done an investment deal. I mean, because every time I did that when I was a kid, everybody said, well, I have a cousin, or I have a brother, or I have a friend who's done this, that, and the other. But you never get it's a secondhand story. And oh yeah, he only put $1,000 down and he got a $200,000 house. Like, nah, like that just doesn't make any sense. Like, get around somebody who's done it. It doesn't have to be us. Just get around somebody who's done it. And that's the first step, in my opinion. And once you get around somebody, ask them questions. How do I get in? What does it take? How much money do I need? Have you seen this happen? I saw a deal. In fact, I think the best way for most people to get in, I didn't start like this, but I see it all the time. They call them wholesalers. And a wholesaler is Raul finds a deal, but he can't buy it. So he finds somebody who can buy it. He marks it up a few thousand and he sells the other guy the deal. You're wholesaling deals. And you can do that in the beginning because you don't have the money to buy it anyway. So don't be greedy. Find a deal and say, hey man, I see you got a little bit of money. Do you want to buy this house? Sure. Well, I'm going to buy it from them for $50,000. I'll sell it to you for $55,000. You want the deal? Let's do it. Cool. $5,000 in your pocket, put that in your savings account, and then keep doing that until you have enough to put down on your own. I mean, that's done everywhere. I've seen that done for a lot of places. So it's not impossible to find deals. You don't have to have money to find a deal.
Gotcha.
You have to have money to buy a deal.
Sure. And by the way, guys, that all getting to this place where you can either buy your first property or buy your first investment property, it all circles back to just basic finances, which is some stuff that we're going to really start to break down as we progress forward. Because some of the stuff that David and I are working on, but the reason why I wanted him to do this video for you guys is because he's very knowledgeable in the real estate space. I'm more in the financial space as it pertains to assets and managing your money. And I think that it's all a process. Like you have to start from step one, which is, okay, where are you at financially today in terms of how much money you make versus how much money you spend? Where's your credit? And then you progress forward and you're able to eliminate a lot of things that are holding you back, like debts and just really bad decision making. And then eventually get yourself to a place where you can buy your first property or where you can invest in your first property.
By the way, guys, if you're watching this and you want to hear some great advice, you've got to listen to Raul on this. He's got some great tips on finances. And I think there's a lot of misconception out there that you have to live broke, or you have to be, you have to either you live broke or you live real rich, or there's a happy medium in life that you can find. You just have to understand that there's a lot of misinformation in the world, and we want to help give that clarity. And Raul's got a lot of that clarity in a lot of ways. And so you guys definitely need to watch these videos when we come on live, because I definitely know we're adding some value here.
Good, man. That's pretty much all the questions that I have, brother. I know that there's a lot more that I can ask you, but I don't want to make this video too long because then nobody will make it to the end. Before we wrap this up, is there anything else that you want to add?
I saw a question in here that was really good, and I just want to answer it because this is, and actually, I mean, maybe even you would want to answer this one, right? So this is really good because it's a good question for both real estate and finance, which is, what would be the advantage of rushing to pay off a mortgage versus keeping a payment and going to invest in real estate?
Okay. You wanna start it off?
Well, I mean, honestly, I love I can answer it with just that statement, which is OPM, which is other people's money. That's the way I think about things, right? If you're going to pay off your mortgage early, I don't know why, right? If it's to invest in real estate, why wouldn't you use the money that you were given excess to go invest in real estate? Like, why do you want to wait 10 years or 5 years or whatever the number is? That's just my belief. But I think you can add some value on why it's may not be the smart decision to put all your money towards your mortgage.
Yeah, so I agree, because if you guys circle back to the section where David was saying, if he buys an investment property and he rents it, he's using the renter's money, like he's calculating, and he's saying, okay, if I charge this much per rent per month, in 10 years, the renters will pay off this property. So other people's money will pay off this property, not David's personal money, other people's money, right? So that's the way he's calculating it there. But if you have your own primary residence and you were able to get your mortgage at 3%, I can think of about 10 assets that can yield you a higher return on investment than 3%. So why take all of your money and dump it into your mortgage if you know that you're going to keep that house indefinitely? why not take that money and put it somewhere else where you can get a higher return on investment? And then if in the future you want to sell it, well, by then your property probably appreciated. So even though you didn't put that extra money to the property, the equity that you build up should give you a profit whenever you sell that property. And you have all this other money sitting on the side that's been yielding a higher return on investment that you can also use to either buy a bigger property or just to do something else.
Yeah. Don't give all your money to the bank, man. That's the short end of that statement. Just don't give it to the bank. Paying off your mortgage may make you feel good inside, but you're really not, you're not using the money that you've been given or blessed with in the right way. You're losing opportunity. That's really what we're missing. Every time we spend money in there, you're losing opportunity. Every time you pay interest, in excess of 3%, we'll call it 3.
Correct. Yes.
Yeah, because 2%, right? It's inflation, so it's 4%.
Yeah. So because if your mortgage is 3% or 3.5%, and let's say right now inflation is relatively low, inflation is like 1.5%. So really, what you're paying the bank to borrow that money is 2%, and we have fixed products that give you a higher rate of return than 2%. So there's opportunities to be able to do better elsewhere, in my personal opinion.
Yeah, you can do it anywhere. So real estate is, to kind of summarize this, guys, is real estate investing. It is probably not the only form of investing that you should be doing or think about doing, but it should be a part of it. That's just my opinion. It should be a part of it. It just needs to be a piece of the action, if you will, in a pie that you call your investment strategy. I don't want people to think about this as income again, because income is not what we're searching for. We are in the future. We just can't think about that right now. I'm trying to tell people, businesses are meant to produce income. That's why you open a business, because the business is going to produce your income. You're going to make money and you're going to be successful. And investment is intended to be an investment strategy, so for future gain. And so put this as part of it. If you don't have it or you've never thought about it, it's not easy, but it's not as hard as you think. You just have to be committed to learning a little bit and hanging out with the right people and listening to some books. And you'll learn as you go through investing that there is no magic wand that you can wave over a property and it's going to be your deal. Every deal is so different, and that's why getting around people who have done it will really help you.
Very cool, man. Well, I think that's all I have for today, brother. And
man, I
thank everyone for watching. And we're going to try to bring you some more good content here in the next couple of weeks as well.
Yeah, and if you guys need us, reach out to Raul, David. We're here to help, and we got some exciting news coming in the next few weeks, so please stay tuned, okay?
All right.
All right, guys. Thank you all for watching. Bye-bye.